Good morning, everyone, and welcome to this morning's webinar. We're just waiting for David to hit the record button, as there is a recording of this session which goes up on my YouTube channel and the YouTube channel for Quantum Trading. But before we start, as always, can I draw your attention to the disclaimer that I know you can see on your screen. And as you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So here we are. This is me, this is David, and we are going to be looking at the markets this morning, the Forex markets, through the prism of volume price analysis and our quantum trading tools. Volume price analysis is the methodology that we use to analyze the markets in terms of technical analysis. It's a methodology that we've been using for many years now, and what we've done is we've also written about it and explained it in great detail. You can find all those details up on Amazon. You can apply it to across the markets, to any time frames. For the Forex market, we've actually put together what we call a library, a Forex trading library. It includes the book that covers VPA, and also books on examples of the methodology and how it, how you can find examples on the different time charts for the Forex pairs. But VPA is just one aspect of our analysis of the markets. That's the technical analysis. What we also bring to our trading and investing is we look at the fundamentals, what's happening in the background in terms of a macro picture, the releases, the data that's released, and also related markets. So we call that the three-dimensional approach. And by related markets, particularly to do with the Forex market, is those currencies that are linked to other markets in terms of both sentiment and directly. One example, a classic example, is the Canadian dollar. Canada is an oil producer, so what happens in the oil market is going to also impact what you see on the chart for a Canadian dollar pair. As I said, all explained in the books that are available on Amazon. And of course, we bring in elements of what are in the books in these sessions. And if you've got any questions on volume price analysis or anything else to do with Forex trading, please just put them into the chat box, and we will answer them. Or you can always email me, anna@annacooling.com, or david@quantumtrading.com. This is actually a slide from our program that we've taken it one level further. You have the books. We've now got a very comprehensive program that explains everything and actually pulls it all together. And I think in these sessions, I know we have readers of our books. We have traders who don't know us from a hole in the ground, as it were. And we also have our quantum trading users and some of our students. As I said, you are all very, very welcome. And the website for that is quantumtradingeducation.com. As I explained, we have developed some specialist tools to help us with our trading, both from a VPA perspective and from for Forex. We have 4 very specialist pieces of software to help us with this market. This market is complex, it's not complicated, and what we have to do is, first of all, we have to try and establish where is the money flowing into, first of all, which currency, individual currency, and then from there the tools have been developed to tell us where we have the strongest movement, where's the strongest selling, and where is this the most buying in the pairs. But we always start by deconstructing the pairs into their individual components, and this is where we use a currency. We call it a currency strength indicator, but it's actually almost a currency flow indicator, because it tells us, is the market, for example, buying the British pound, selling the British pound, and then we look at the other indicators. We've got the matrix, the array, and a currency heat map to tell us, which pairs are actually moving at any given time. And with regard to movement at any given time, the other really, really key issue about the Forex market, and you really have to take this on board, it's a market that is marketed as you can trade at any time and anywhere, which is true theoretically, because it's open, not theoretically, in practice it is open 24 hours a day. But the flows that are going into different currencies and different currency pairs, they're not equally distributed. You know, you will get the Asia Pacific session, which we're just coming out of. It's the local currencies which will take centre stage. We've had some news, some Australian employment news. There has been there's been some buying of the Aussie. Doesn't mean the Aussie is not going to be bought in other sessions. It's just maybe in a pair such as the Aussie yen, which is a pair that represents sentiment. But you have to be aware that you, first of all, you have local currencies for local time zones, and the depth of liquidity is it's not evenly spread, it's not equal. The biggest, deepest liquidity is actually now the sessions that we're coming in now, which is the London session. It takes up 43% of this 6.6 trillion a day market. It's a vast market. So, you know, you have to be aware that, as I said, it is 24 hours, but it's busier at certain times and not others. And that could, you know, that could impact the tactics that you bring to trading, and also the time that you need to devote to it. You know, if you can only trade at certain times when it's low liquidity and quite quiet, then you may have to look at maybe moving to slower time frames. Whereas we're blessed, as I said, with this huge pool of liquidity. You know, we are spoilt for choice, both in terms of currencies, currency pairs, and also the time that we can stay in the market. You're going to get more moves, and they're going to be moving more quickly. So that's also important. The indicators I mentioned, quantumtrading.com, we'll go through with them. We'll explain a little bit about them as we go through the sessions. The website that you'll find all the details on are quantumtrading.com, which is there. That's the screenshot from the session, from the website. The education program is quantumtradingeducation.com, and that's the website for it as well. I'm just going to stop there and set my charts up because, as I said, it's already on the move, primarily because of Brexit. I'm just having a look over at Talking Forex. It seems that the DUP, the Northern Irish Party, have come out and said that they can't actually support the plan that's been put forward by the Prime Minister to try and resolve the Brexit impasse. And when we were talking about the 3D approach to trading and invest, it applies to investing as well, actually. When we first put the books together, at that time, politics certainly didn't have the influence that it has at the moment. So I suppose, in a way, maybe, David, we should call it the 4D approach. It's certainly the fourth dimension in terms of politics. It's not just Brexit. We have the tariff war, tariff issues between the US and China, and coming up, we will also have the US and Europe. So, as I said, there's a lot going on in the markets at the moment.
Thanks, Arling, and a very warm welcome to you wherever you are in the world. Good to have you with us today. And as Anna said, if you have any questions, please just drop them in the chat box. If they're short ones, we'll answer them there. If they're longer questions, we will answer them on air for you. It's really interesting at the moment, I have to say, because while Anna was talking, I've been watching the currency strength indicator across. This is on the faster time frames. I've got the 5, 10, 15 minute up on NinjaTrader. We flip-flop. Anna's on MT5. I'm on NinjaTrader, but we flip-flop between the two. But actually looking at what's going on, it's a very interesting, it is unusual. It happens from time to time. It's certainly happening right now, where you've got primarily only one currency being sold, which is the British pound, and virtually everything else is being bought. And what that means is, first of all, that's very clearly displayed on the currency strength indicator across the various time frames. I've got the 5 minute, the 10 minute, and the 15 minute for those of you who've got the indicators anyway. But Anna will show you hers on MT5. But what we're seeing right now is virtually every other currency is being bought, as I say, certainly over onto the 15-minute time frame. The Aussie is very overbought anyway, but it's still rising a little bit. But the other 6 currencies are climbing strongly. As I say, the only one that's being sold at the moment is the British pound, deep into oversold territory for the reasons as Anna's outlined. And the corollary to that is very simple. That if you're looking for opportunities to trade right now, certainly on the faster time frames, you're going to have to go down to the very fastest sub 5 minute or up to 5 minute at any rate to dig these out, because when you've got all the currencies being bought and they're all rising strongly, you've got the Canadian being bought, the euro, the yen, the Swiss francs turned up, the New Zealand dollars turning up a little bit as well. When they're all rising together, what that means is there's no differential in terms of price movement between the currency pairs. If a currency is rising with another currency, it simply means that particular currency pair is in a congestion phase, and therefore it's not tradable unless obviously you're looking at some sort of sideways option strategy. But generally speaking, if you're looking for a trend, there isn't going to be a strong trend. There may be a modicum of trend if one of those currencies is moving more strongly than the other, and the analogy I always use of two trains leaving a station, where one train is moving slightly faster than the other, so you have some differential speed. So there will be a minor trend, but what you're always looking for with the starting point of the currency strength indicator, you are looking for either extremes where currencies are overbought and oversold, and therefore you're looking for at it from a reversal perspective, or alternatively, you're looking at it from the perspective of a trend that's already underway, where you have one currency rising very strongly, and that's counterbalanced by a currency that's falling very strongly, and that will then deliver strong trends. So what we're seeing right now is very unusual. It happens from time to time, but it's very clearly displayed on the currency strength indicator. I'm going to pass back to Anna, and she'll show you that on the MT5.
Right. From what David was saying, it actually opens up another aspect, a facet of trading, which is something that we're going to be paying a little bit more attention to in the sessions, in the not just this sessions, but sessions that are that we've got scheduled for the rest of the year. And that is, as a trader, and going back to this 24-hour market that we're in, is when we come to our trading, the first thing we have to try and establish is what kind of market condition are we likely to face. Or, you know, what are we facing and what are we likely to face? What is it that determines the market condition that we're in at any given time? And there are all sorts of factors which will determine that. One of them will be whether are we in a period of volatility? Is that volatility being caused by politics? Is that volatility being caused by fundamental news? And it's the best analogy that we have come up with, and in fact it's explained in detail in one of the books on Amazon. It's actually on binary options, because if with options, volatility is at the heart of option trading, and understanding volatility is at the heart of option trading. And that is the analogy of the weather, and particularly the sea. Those of you who've if you're sailors, if you like to go out on boats, or even if you don't like to go out on boats, you will know that if you decide that for whatever reason you want to take a boat trip, the first thing you have to do is you have to try and establish, well, what kind of conditions am I going to face? Am I taking out my little boat on there's a storm 7 blowing out there, or the threat of a storm 7, or am I going to take this boat out and it's a very quiet, calm day? So understanding the conditions, and that is, traders don't even think about that. They don't think of the conditions that they are trading in, but it's really, really important. Secondly, second to that is, what kind of trading tactics have you developed? What have you put together as a set of tactics to actually make money from the charts? Now, you may think, well, what a strange question to ask, but actually, do you actually even know that the chart that you're looking at, is it suitable for the tactics that you like to use? So, for example, we talk about reversal trading, we talk about breakout trading. Those are two very broad tactics. Well, is the chart that I like to trade, is it actually set up for me to be able, so that I can exploit those tactics? And we're going to be looking at that in more detail. And thirdly, do the indicators that I used, what signals do I use? What do I look at the chart? Are they actually the correct ones? I know you may think that seems, an obvious thing, but you'll be surprised. It's this, putting together the indicators that you're using on your chart. for example, a moving average? Is it actually, when is the most appropriate time to use a moving average? Where does it work best? How can I leverage the indicators that I like to use? First of all, are they suited to the tactics that I like to use? Secondly, how best to leverage them. So as I say, we're going to talk about that, and perhaps, and thirdly, there is another element to that, is, are the tactics that I like to use, do they actually suit me as a trader? Because it's all very well people saying, well, you ought to be a reversal trader. First of all, how do you know when a chart is, an instrument is coming to a reversal point? Well, volume price analysis will certainly tell you, because one of the advantages of the methodology is it deconstructs the chart into its cycle. So you will know by the end of it, am I in a period of distribution? Am I in accumulation? Am I in a trend? And then it breaks it down even further. What kind of trend am I in? Am I in a volatile trend? Am I in a trend with low volatility? Am I in a congestion phase? So there's a lot of background that you need to know even before you look at whether there is a trade, a potential trade opening up. Now, the indicators, there's a standard indicators, the proprietary indicators that we've developed have all been developed to help us give answers to those questions. And the final element to this is basically, am I temperamentally suited to being, for example, a reversal trader? Because each set of trading tactics have a different risk profile, and risk is really at the heart of trading. Am I suited, am I trying to do something that actually I feel really uncomfortable with? So maybe I should be looking at deploying another set of tactics in a certain market condition because I feel more comfortable with it. So as I said, lots of questions, and hopefully, as I said, we will put together answers for you, but not all today, because these are really important questions, and we're going to be developing them and answering them in the sessions to come. Right, very quickly, we can see the news that sparked everything has been the British pound, as David said. We have quite an unusual situation here. This is the British pound. This is my 12-minute chart. As we see, it's been selling off quite sharply because of Brexit news. DUP could suddenly change their mind in an hour, and then you have a complete reversal. But as David said, this is very unusual. This pound has been sort of universally sold against everything. So if you're coming to your terminal now and you think, oh my goodness, and you're an opportunistic trader, you think, I'm just going to trade what I can see. You don't have a preference for one or two or three pairs, then this is what the market and the indicator is telling you. Money is flowing out of the British pound and flowing into other currencies, and then we have to decide, well, which pair is going to offer the best trading opportunity. But just to scroll back to multiple time frames and also moves, if you like, let's call them trends. One of the other issues that a lot of traders have a problem with, and we have questions coming into to us as well, both myself and over at Quantum, is this: when you look at an indicator such as the CSI, and you look at, say, a daily chart. So let's move up to the daily on here. And this just answers it. And you look at what is the daily chart telling you? Well, given the performance of the British pound, since last Thursday, it's been on a phenomenal run higher ever since there has been a breakthrough. Allegedly, not allegedly, but they're talking again. Agreements have been, with the previous withdrawal agreement has been reopened by the EU, having said that they would never revisit it. All sorts of red lines have been crossed, and market has taken that as, oh great, there is a deal in the offing. And this is what the daily charts is telling you. The British pound has been bought, and bought very heavily, and we can see here against the New Zealand most strongly, and also the Japanese yen. The buying of the pound against the Japanese yen has also reflected the improved sentiment across the markets generally. So, as I said, related markets, as I said at the beginning, so you have the pair, you've got the pound on the Brexit, but the yen, as I said, it can face both ways. It can be a risk on and a risk off currency. That's what the daily chart is telling you. So that's the trend, if you like, in the daily chart. Now, when you go down to the faster time frames, you are then going to come across micro trend, pullbacks, corrections, which are going to be eminently tradable. And you have to hold this in your head. What is happening on a slower time frame, whilst it will take precedence, there will be opportunities to trade counter. You will have micro trends in the faster time frames, and in fact we're seeing such an opportunity at the moment. And I have here the hour, the 12-minute and the 3-minute, and the reason I have the hourly chart is very simple. Going back to what I said about the time zones, it is the easiest chart to look at, and you don't have a lot of you have 8 candles to look at, and it's the easiest chart to pick out, you know, what has been happening and what is happening now. With the MT4 and 5, you notice that the timestamp is never in alignment with your chronological time. So you either have to hover over these lines like this and say, right, what that was 8 o'clock, that's actually 6 o'clock because it's 2 hours ahead of your actual time. One of our traders, and I don't know if he's in the room, I think it's David, is he in the room? He's come up with a great idea, and that is he actually draws physical lines down this indicator. I haven't done it on this occasion, I'll do it next time, which actually shows us the point at which the new session kicks in. Now, so if we go over here, when we first started, this was 5 o'clock this morning. We were up at 5 this morning, and the British pound was sort of turning over, but there wasn't any strong movement going lower. But suddenly, this is the move that we have seen even before we look at a chart. This is the hourly chart. This is the extent of the sell-off in the British pound, simply as a reaction to what is happening on Brexit. So that gives you my context. My context for trading, my intraday, the day trading, is the hourly chart, then the 12-minute chart, and then I have the 3-minute chart. And I have also a non-time based chart, which is a Renko. So this is the 3-minute, and we can see the dramatic move. As we can see, it's fallen, it's attempted to rise, and it's still going sideways, which is also confirming that markets and currencies and currency pairs can stay overbought and oversold a lot longer than we can stay solvent. Now, the other indicator I have on here is the currency matrix, and as I said, this is where we have to pick out the best pair where we have seen this selling of the British pound. If I just flick up let's say the 12-minute, bring that down. I've actually put 2 indicators on one chart. I've highlighted the British pound. Look at the numbers. In fact, on this time frame, it is the US dollar has taken a bit of a swan dive, but all these numbers on here, they're all fairly consistent. They're between 48. So what that tells us is the selling of the British pound has been consistent against all the other currencies. And in fact, this number here, plus 43, obviously that's against the euro. So it tells us that there's been a universal selling of the British pound, and really, you know, it's not been strongest in one pair as opposed to another. What we then have to do is actually have a look at some charts, and I've actually got a matrix up, which is what I call a manual matrix of hourly pound pairs, and this actually, you can see the actual price action that we have seen on the chart. So let's have a look. As we've had the cable at the bottom of the matrix, and what we have here, as we see prior to this news, what was the chart doing? Well, it was going sideways. It was in consolidation. Cable is not a hugely traded pair in the Asian session. It's what we would expect to see. We would see this kind of price action, sideways congestion, consolidation as we move into Europe, and now obviously London coming on board, which is where you will get the big moves. But this news has come in. We have this this dramatic sell-off. We have had some support, some buying coming into cable, but in fact it is now selling off once again. And if we move on to the 3-minute chart here, this is much more dramatic. In fact, if I just reduce it quickly, this is the consolidation period. As we can see, really pair not going anywhere, as you would pretty much expect. This is the condition, this is the market condition that you would expect for this pair. This is the volume point of control. It's a volume a support and resistance indicator based on volume. It's a hugely, hugely important indicator, because as I said earlier, we need to understand the market condition, but also what is the condition of the chart in any time frame. And the 3-minute chart is clearly saying, if you have come into the market at this point, what is this chart saying? Well, it's not going anywhere at the moment. It's waiting. There is going to be a break, a divergence from this, we call it price agreement, and there's going to be a catalyst. It could be a piece of fundamental news. It could just simply the market switching over to a different time zone. But in fact, the catalyst on this occasion was this, as I said, this piece of news. Then we have the pull away. We have accompanied by volatility, down, 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 increase in volume on the way down, but also an increase in volume with some price support coming in. And we've had an attempt to rise. Look at the volume that is accompanying that attempt to rise. This is classic. This is where classic VPA comes in. You have 3 up candles, but you have a little shooting star there, but you have falling volume. Then we have some more selling coming in, and now we're moving sideways. What we have now are clearly defined support and resistance levels. So if you've missed this move, which is perfectly feasible depending on the time that you start, we now have to be patient. We know London is going to be opening soon. We've got the support resistance levels in place. We have to wait for any more, perhaps, keep an ear out for further news. But at the moment, it doesn't look as though the British pound, there's much positive sentiment towards it. Yeah, sure, no problem. I'll bring that up to see what David says. So this is the 3-minute chart. Now, what I would do from here, I would actually go to my profile for cable, where I would have, as I said, a Renko, and I would have other time frames. So it's a 3-step process. We look at what the currency is doing in relation to its counterparts on the CSI. We look at how that translates to the pairs, and then we look at the charts of the pairs, and then I have a profile for the pair that I think is going to offer an opportunity to offer a trade. And all the other indicators that we have developed, they all have different functions in that decision making. First of all, in a decision making, at the decision making stage of the trade, also in maintaining or holding a position, and also critically an exit, where we come into a potential exit.
Might switch over to Ninja in a minute because I've got cable up as well, so we might do that. But just staying with Anna's chart for a moment, just to pick up on a couple of small things there. First of all, at the bottom of the screen, you've got the trend monitor, and using the trend monitor in multiple timeframes is absolutely essential. It takes a more considered view of the trend. The trend dots that are applied to the chart itself onto the price action work very closely to the price action, and therefore will be the first to change, which is why we sell it as a bundle package of the trends indicator and trend monitor, because the trends gives you a close-up view, a macro view if you like. The trend monitor then steps back, and the two of them work in combination. The function of the trend monitor is really to try to help to keep you in positions. As they develop, you get the inevitable congestion phases, inevitable reversals, but it's the trend monitor's function to try to help to keep you in a position once you're in, purely because if you can do that, it is one of the hardest things to do in trading, probably the hardest, because our instinct is once we've got a little bit of profit in a trade, we want to close it out and take it off the table because we're fearful of losing it. And once the market pulls back against us, that's what we see happening, and then we're triggered by emotion and we close out, and then the market congests and continues in the same direction. Invariably, not always, but generally it does. That's the function. It's partly driven by market makers and it's partly driven by price action. So that's the function of the trend monitor, and that's why it's bright red at the moment. It's just holding you in, holding you in, holding you in. The trend dots are still red. They haven't transitioned into grey at the moment. They may do. That's in a congestion phase, and ultimately, of course, they may well transition through to bullish to show a transition in the trend or reversal in trend from bearish to bullish. The other aspect of the price action right now, severalfold. First of all, we've got London coming up in the next 28 minutes. This is a classic opportunity for the market makers. If you've not traded through, you don't understand about crossover periods in the Forex world, they are the most dangerous. They're when we get riptides coming in, purely because it is an opportunity for new market participants, and particularly the deepest market of all, which is London, to come in, for the market makers to create trap moves all over the place. You invariably see volatility, you'll see reversals coming in, and then changes in direction. This is a classic opportunity for them. We've had some news, markets selling off. And the other aspect of this, of course, is we're in Europe. You can see there on Anna's chart the transition from the Far East Asia, where you've got, it's not low volume, it's just merely the fact that we've got increased volume in Europe, which is now coming in to compress the volume that was previously driving through Far Eastern Asia. Far Eastern Asia is much lower in terms of volume, and gradually as you see these bigger markets open, then that volume becomes compressed. It doesn't invalidate volume price analysis, it just simply represents the fact that we've had a session crossover and we've got another one coming which will push everything even further down. The other two aspects of this right now, first of all, you can see that level that's been tested at 127.54, 55 odd. That solid line there is on the support indicator, the dynamic support and resistance indicator. And the solid line is merely indicative of the fact this is a stronger region. You've either got dashed lines or you've got solid lines. So we are testing a very solid level of potential support here as I'm speaking live. If that's breached, then that will open up and obviously become resistance. At the moment, it's acting as support. But if the market moves below that, then it will act as resistance. Now, immediately below that on the volume price histogram to the right-hand side of the chart there, you can see that volume's falling away. The yellow line is actually the volume point of control. That was the point at which the market was in price agreement. And as we break away, either to the upside or the downside, then bearish or bullish sentiment is taking hold. So around the volume point of control, you've got price agreement. In other words, there's no strong sentiment to push the market one way or the other. As that develops and breaks away, then the sentiment starts to develop. And as the volume is falling, at the greatest volume is at the volume point of control itself, at the yellow line, which is actually sitting on the S3, which is on another indicator. But below that, you can see how the volume is falling away now. And immediately below us, we've got a low volume node. What that tells us is if the market does break to the downside, then it should move through that area pretty rapidly, because you've got nothing in the way of price support to come in and cause the market to create a platform. But you've also got very low volume in that region. And what low volume tells you is that low volume works in exactly the same way. It's the same principle as support and resistance. It's just from a volume perspective. If you're coming to a high volume area, then the prospect of the market congesting is much, much higher. If you're coming to a low volume region, then the prospect of the market congesting is much lower. It will move through that pretty quickly for two reasons. Firstly, because you haven't got much volume there to cause it to pause. Secondly, that if the market's not considered it an important region in the past, then it's unlikely to consider it an important region now. So the market, therefore, will likely to move through that pretty rapidly, as indeed you can see higher up the chart. So that's where, sorry, apologies, the yellow line, the volume point of control is at the top of the chart. I do apologize, that's the S3 line, the yellow line, but the actual volume point of control is up where Anna's cursor is there in the congestion phase, apologies. That's where the heaviest concentration is volume. It goes right the way out, halfway across the chart. And now we're breaking lower through the, away from the volume point of control, which is there. We went through all that low volume, which very rapidly, as I outlined, and now we've come down. We're building some volume in this congestion phase, and now we're waiting for a break lower through that support platform and on down into the low volume region at the bottom of the histogram. Okay, we're just going to switch over onto Ninja. Just pop that out of the way. You want to switch over? Yeah, just going to pass back to Anna for a moment. Hold tight, just find my chat box.
Right, just to go, this is where the market sort of reacts. You have a kind of knee-jerk reaction to a item of news. What the DUP have actually said is they can't support it as it stands. Now that's those words at the end are actually quite significant, yes, because it kind of says, well, you know, they haven't. In other words, more negotiation. They are very, very tough negotiators. So we'll have to see what. Just beware. Sometimes, you know, markets react to, you know, there's a knee-jerk reaction to a comment, a piece of news, as it were. But actually, and it's what we all do. It's part of behavioral psychology. We use what are called heuristics. We use rule of thumb to make quick, snappy decisions, because our brains would just be overloaded if we had to take consider every part of a decision. But sometimes we can, we kind of miss a little bit off the end. We think, oh yeah, that's fine, and that's what I think the market has done. So, you know, I've just looked at my Twitter feed, and I've got some sort of political commentators going through there, and they have actually said they've made a point of saying they can't support it as it stands. There's an EU meeting today. That's when Boris Johnson is supposed to be going over, and it's, you know, sort of sorted out finally. That's all day. In fact, if you go over at Forest Factory, it's there. It's an EU economic summit. And before that, for the British pound, we've actually got retail sales at 9:30. Fundamental news seems to be very much a back seat these days, but that's a piece of news that would, you know, in itself would move the pound could move the pound quite dramatically, as I said, but everything kind of being swamped by what's happening with Brexit as we approach the 31st of October. But as I said, the DUP have said, as it stands, could be significant. We will wait and see. And the charts will tell you, the indicators will tell you, if you suddenly see, you know, and this is why it's important. You've had this, you know, we've all said, oh right, the DUP aren't supporting it, that's it, everything's going to collapse. That's it, sell the pound, you know, that's it. And in fact, the initial reaction was to sell the pound. It's gone through these key levels. It's now in congestion. Maybe there's a reflection saying, well, you know, anything can happen because you have a broader context which you can't absorb simply because at the time, because the market moves so fast. Just pass over to you, David. Is that it?
Just get Ninja up. Hopefully that's come up. Just look over on Anna's. Yeah, I can see it there. That's great. Okay, fine. Just move that out of the way. Moving my chat box down. We're on cable. I'm just going to hop around to some other workspaces as well. We're on cable here. I've got this at 15 second. I've got 5 minute. I've got the 10 minute down here, and on the bottom I've got 15 minute, 60 minute, and over onto daily, which is quite interesting at the moment. You might be surprised to see a 15-second chart. I happen to like using it because I can read the chart very fast. I can read it from a volume price perspective, and it just gives me a heads up as to what is going on into these slightly slower time frames of 5 minute, 10 minute, and so on and so forth. I might have this at 2 minute, might have this at 3 minute, but just for the time being, I'm going to leave it as it is. And what it gives you is a perspective on the potential reversals coming up, and it does illustrate when you're using multiple timeframes, the power of the information that you receive. This is the difference. One of the many differences between Ninja and MT4 and MT5. But one of the beauties is that you do get real-time stamps. So we're running a real-time here in terms of our local time. So this is 7 o'clock. This is when Europe gets underway. This is Far Eastern Asia over to the left here. So this is the step up in volume, big volume coming in, and what's clear about the price action that we've seen over the last, certainly over the last hour or so, and you can see it reflected across the charts. Let's go up to the 5 minute. There we go. We saw the move develop. We broke away from this congestion phase, moving down. The volume comes in. It's picking up. It's Europe opening up, and then we get the volatility triggers coming in. This one, there's no wicks to the candle. We've actually followed straight through, but then we get this one. Look at the amount of buying we've got coming in here. It's not necessarily mean a full-blown reversal, but it's certainly enough to stop it in its tracks. There's a ton of volume under here. There's definitely a load of buying in here. There has to be, purely by virtue of the fact we've got this big increase in volume, which we were expecting anyway as the Europe market gets underway or is preparing to get underway. And we've got a big wick to the lower body of the candle. So we're expecting a couple of things. First of all, at the very least, some congestion, which we're now seeing, more sideways movement, and the possibility of a full-blown reversal in due course. Similar sort of picture up on the 10 minute. What have we got here? Again, we've got volatility, then we get the ton of volume coming in under this particular candle, very deep wick to the lower body, a huge amount of buying coming in under there. Is it enough to reversal? The next one is a long-legged doji, indecision. We go up onto the 15 minute, down at the bottom left here, there we go. Again, similar sort of picture. So what we're seeing is, yeah, there's been a plunge. Yes, it's been driven by Brexit news, etc., but there is certainly some buying being aligned in there. And if we go over onto the currency strength indicator to start with, I'm going to go through these actually in step-by-step process. This is where we are. This is on 5 minute. What have we got? Heavily oversold British pound down here. And if you're looking at this as a reversal opportunity, really spoiled for choice. Are you going to buy it against cable? Are you going to buy it against the Swiss franc, against the yen, the Canadian, or the euro, which is already starting to turn down? So if you're looking at it in terms of euro, that move is really just starting to leave the station, to go back to my analogy of earlier on. And if that continues and we see continued buying of the British pound, albeit we are now at 7.45, we've got 15 minutes to the London Open. If you're looking at this opportunity ahead of the London Open, I would suggest you wait, purely because as London gets underway, there'll be a surge in volatility. There'll be all sorts of trap moves going on, whipsaw price action, and then the market will settle and find some direction. And as Anna said, it's one of the things we cover a lot in the Forex education program. It's really understanding the nuances of words. The examples we've used in the program, at any rate, very much center around the Fed and central banks and the words they use there. A single word can change a market direction dramatically. The same is true here when we're dealing with politics. It has exactly the same effect on the market. A single word, a single change in phraseology will have a massive impact on the direction of the market. So what we're looking at now is the possibility of a reversal trade. And in terms of other opportunities, it's quite interesting because really in terms of extremes, that's all we've got available right now. The other opportunity, we've got heavy selling of the Aussie dollar here, as you can see, this blue line, and we've got equally strong selling of the New Zealand dollar here, this grey line. So those two are moving pretty strongly south. But there's really not very much to match them up against because we've got nothing coming up from below and we've got nothing crossing this way. The angle of inclination gives you an instant view on the strength of the trend. If it's falling very strongly or rising very strongly, then that tells you instantly what is going on. And it gives you a heads up to the strength or weakness in that particular trend. The euro here, you can see, is starting to kick lower, starting to move down, and the pound is just gradually starting to kick up. If we go up onto the 10 minute, similar sort of picture there. Aussie's just rolling over. All these other currencies up here still rising. Pound is just starting to tick up off the floor a little bit. And over onto 15, similar picture there. These currencies haven't got to overbought, but then we're on a much lower time frame here, but the pound is still flatlining down the bottom. So if you're a reversal trader, then that's what you might be looking at in terms of an opportunity. And in terms of the, let's just go over onto the currency indices themselves. These are the four indices. I've got the yen, the dollar, the euro, and the pound. These are all available on MT5 as well, MT4, MT5, and I've got them on Ninja here. And what this tells you is pretty clear. This is on 5 minute. If we look at the yen, we've got the yen. It's kind of climbing, but it's a bit sluggish. This is the move we've seen in the dollar. This is the move we've seen in the pound, and that's why we've seen that strong move in terms of cable, because it's reflected in terms of the individual indices themselves as well. Over onto the euro, we've seen some buying of the euro. That now seems to be topping out a little bit into congestion, may well be a full-blown reversal in due course. Should go back onto the charts again, back onto cable. There we are, see where we are. We've got the volume point of control here. We're congesting around that, no great surprise. Just have a quick look at the 15-second. Gives you an idea, gives you a perspective, gives you an instant view of a very fast time frame, but exactly the same principles of volume price analysis apply as indeed to the indicators. You can see the transition on the trend monitor. We've gone from this bullish run up rather, into the two transitional colors of a darker blue into darker red into a bearish phase. Now we're starting to see possibly a reversal again. You see this big spike here, ton of volume coming in. If you were trading that as a scalping trade and you saw that instant alarm bell ringing, two reasons. First of all, you've got the volatility trigger, so you're expecting a pause point and congestion maybe. Secondly, you've got a ton of volume under here, so there's heavy selling gone into that particular candle. You're expecting a reversal and you get it. Similar sort of picture building here. Quite interesting on this one. We've got 3 candle uprise. Then we've got the weakness coming in here. Candle with a wick to the top, pivot on the upside, decent volume under there. You know, it's looking a little bit weak. However, if it does break through and continue higher, we've got a low volume region up here, which means the market should move through there pretty swiftly. You can see the transition now on the trend monitor. We've gone into bullish phase now, straight through into we dipped on the darker blue. We've gone straight through into bright blue now, and the trend line is climbing quite nicely there as well. What's interesting now, you've got three candles here, and you've got falling volume. So we've got a rising market with falling volume. That's a signal of weakness. That's going nowhere purely because there's nothing to drive it at the moment. And that is an anomaly. It's anomalous because if you want to see a rising market, you need to see rising volume. And in the same way, in a falling market, you want to see falling volume. The two go hand in hand. It's very easy to understand the concept of a rising market, which requires effort because we're all familiar with gravity. But in terms of a falling market, the same principle applies. You have to see effort going into a falling market if it's going to fall fast. And it's not going to fall fast if you see volume falling away. It's as simple as that. Getting close to the London Open now. We're up at 749, 750 odd. So it's a question of being patient, waiting for the market to open. Expect to see volatility. Expect to see whipsaw price action. The market's going to be racked around by the market makers. It's a classic opportunity. And then maybe we'll see a continuation of the reversal that we're seeing right now. What's interesting on 15-second, we've got volatility coming in. What do we expect to see? Either a reversal or a move back inside that candle temporarily. Just see if that is the case. Pop that up. There we go. We've got more volatility coming in on top of that now. So we've got volatility followed by volatility. So we're expecting further price congestion. Not strong at the moment, and we just have to wait and be patient. We'll go down onto a slower time frame chart. That's just telling us where we are at the moment, and we're now waiting for London to open. Let's just head over to the back to the currency strength indicator. There we go. Let's go back down onto 5. That's what we're seeing right now. This little bit of buying coming in. If you're trading another currency pair, then certainly euro pound I'll be looking at right now because the euro selling is decent. Let's see if it's the same on 10. Yep, it's rolling over on 10, and it's just starting to roll over on 15 as well. So that would be a decent one to look at. If we go over here and isolate out, let's have a quick look at isolating out the euro. And just while I'm here, let's have a quick look at the pound. This is the currency matrix on 5. Okay, and what the process and the way we develop, the reason we develop these indicators is very simple. You start with the charts. That's a given. You've got the charts up in all the various time frames. In terms of the specific indicators on the currency dashboard, the currency strength indicator is always the starting point. As Anna said, it's the place where you're looking at the raw building blocks of the market, the currencies, in other words. So that's step one, if you like. The currency matrix is step two, because what the currency matrix does, it's the difference between the currency matrix and the currency array, which is the next step, which is this one, is really to do with the speed and getting in. The currency matrix is really the getting in indicator when you're looking at currency pairs and looking for opportunities, purely because it has a shorter look back period. So in the same way that I was talking about the trends and the trend monitor, where the trends is very close to the market and the trend monitor takes a more considered view, the same philosophy applies to the currency matrix and to the currency array. The currency array has a longer look back period, so it's a more considered indicator. And the difference between the two is primarily that, first of all, on the currency matrix, we are looking at a very shorter period of price action, and therefore it's an opportunity for getting into the market. And the currency array is really looking at it from the longer term perspective of what is the trend development across the 28 pairs, which has got the strongest trend. And in addition to that, it also has the ranking ladder, and it has this overbought and oversold ladder alongside, which gives you heads up as to when markets are approaching those regions of potentially oversold or overbought. In this case, we've got potentially oversold here in the darker color with the brackets. And as it gets to an oversold position, it'll go to a brighter red without the brackets. And the same is true at the top of the chart for overbought, where it's blue, obviously a different color. Let's just pull that up there to the top there. In addition to that, what the currency matrix and the currency array also tell you is they tell you about broad market sentiment. If the market is universally buying or selling the euro, then what you will see on the matrix is all these pairs aligned. So if it's buying of the euro, then you'll see them all aligned at the top. If it's selling of the euro, then gradually they will align to the bottom. And what we're seeing at the moment, certainly in terms of the 5-minute, is a little bit of divergence. We're seeing the euro pound here because we're seeing a modicum of selling on euro, equally driven by some mild buying of the British pound right now, which is why this one is ranking down here. And that is true of the other pairs here also. But what we're seeing up here is we're seeing the opposite of that in terms of the Aussie. So we're seeing strong buying of the euro, and that may well be driven by strong selling of the Aussie. So there's a little bit of divergence here. And if you're looking at opportunities, you have to be aware of broad market sentiment, because the analogy is of a river. You want to be trading with the universal flow of sentiment. You don't want to be trading in isolation. You can, if you wish. It's a higher risk proposition, because if you're buying the euro and the market is universally selling the euro, there may be a reason your particular pair is being bought and the rest of the market is being sold. Could be politics, could be fundamental, whatever. But the fact of the matter is you have to understand that and be aware of it. And as I say, it's a high risk proposition. So that's what you're seeing. It's another facet of using the currency matrix indicator. As I say, it is the getting in tool, and it also helps you identify that market sentiment. Then you move to the currency array, which takes this more considered view. It gives you the sentiment again across the market. Is the market universally buying or selling? For example, if I isolate out the yens, what you want to see on the yen array is very much a case where all those pairs are either one side or the other, because the yen is the counter currency. And finally, down onto the heat map, which gives you all that information across the time frames, the strength and weakness. And the ranking ladder here is where currency pairs are weighted according to the time frames, because clearly, a 1 minute change in sentiment is going to carry less weight than a longer term, slower monthly. I'm going to switch off there. I'm just going to pass back to Anna for a moment, if I may. Let me just, in fact, I'll just carry on for a moment. Let's go back to the charts again. Where are we? There we go. Let's just go back to the charts and see what's happening with cable as we come up to the London Open. Let's just flick that off. There we go. We've got 5 minutes to run, and we're going to see a huge amount of volatility, no doubt. A lot of choppy price action. In fact, let me just switch this over to Euro Pound. That might be quite interesting to have a look at. There we go. It's just loading up. And this is really what we're seeing in terms of the move in the slower time frames. This is on 10-minute. This is the selling of the euro that we saw on the currency strength indicator, and is also starting to be reflected on the matrix as well. It's not particularly strong, but it's certainly an opportunity. And a lot of volatility. There's a huge amount of volatility around right now, which is no great surprise. Down onto 15. Lots of volume coming in here, as we saw on the cable as well. Weakness coming in. We saw a big wick to the upper body, volatility trigger. So that market is not going to go very far because we've got a lot of selling coming in there by virtue of the volume and also the price action. And expect the market to congest, which is what we're seeing right now. We're still trading within the spread of that particular candle. And down onto the 60-minute, not quite so clear cut on the 60-minute. We've got a pickup in volume, but it's not particularly demonstrable purely because that's coming into Europe. Now what we want to see is the volume that's driven in through the London session. Might stay with euro pound as London gets underway. Let's go back onto the faster time frames. Here we go. Okay, we're still seeing euro sold. We've got 4 other pairs here with 4 other opportunities here. We've got euro, yen, Swiss franc, dollar rolling over now as well. It's 5, 10 and 15 on the currency matrix. You can see euro pound up at the top. Euro pound up at the top, so it's certainly setting up for reversal. And the euro pound here, we're down on 5-minute. You can see how far it's come off now, down at the bottom here. Just head back. Okay, there we go. I'll just leave it there for a moment, just while we see what goes on. Let's just put the 15-second chart up, and we can see the surge in volume that's going to come in. Bear with me a moment. Okay, here we go. In terms of, you can see the volume shaping up. Nice move. Trend monitor supporting if you're trading this particular time frame. Again, another trap move on volatility. You can see it here, volatility trigger into the spread of the candle. You've got a lot of factors playing in now. You've got this is the volume point of control. This was a very strong region of price resistance coming into play. The nice thing with the accumulation distribution indicator on NinjaTrader is it actually shows you these in different thicknesses. In other words, the strength of support and resistance regions. On MT4 and MT5, you have 2 levels. You have dashed lines, you have solid lines, which show you those regions. On NinjaTrader, it takes it a step further and it actually develops these into thicker lines. So the thicker the line, the more that region has been tested or held, and therefore the stronger it is in terms of a support and resistance level. These levels here are very lightweight. They've only been tested once, and therefore they're going to have a relatively minor impact. Levels such as this are pretty major. They're very strong. This red line here, you can see how strong it is. A very strong region. Once you test those levels, then that's going to cause a market to pause at the very least. Okay, here we go. London coming in now. Lots of volatility, as you would expect. Driving down, we've got the volatility trigger will trigger in real time. In other words, it won't wait for the bar to close. It's actually triggered now. So for a fact you've got volatility, ton of volume coming in, which is what we expect. This is the London Open. This is what we expect to see. Big wick to the lower body, expect to see a reversal. That's what the market makers will be planning, because there's lots of news around and opportunity to trap and trick on all sorts of levels and time frames. More volume under that one. Wick to the upper body, good solid volume, decent selling under there for the time being. If we're going to trade this short, then we want to see a breakaway from this particular candle. Once we're clear of that candle, and actually I'm glad it's closed there, because it's a question we get asked a great deal is, well, how far away do I have to wait before I jump in? can't give you an answer to that. It's just a question of deciding for yourself at what point. It's like breaking through resistance or support. You have to decide at what level you are comfortable getting in. Is it 5 points, 2 points, 4 pips, 10 pips, whatever it is? That's what you have to decide. And what's interesting here, we've got a falling market. Remember what I said before, you're always looking for anomalies, either in terms of straightforward volume and price action, or you're looking at it across groups of candles. You've got an anomaly here in terms of price action because you've got a falling market here and you've got falling volume. So that is a sign of weak follow through. It may well pick up again, but that was certainly an indication. You know, when this candle comes in, that's no great surprise because you've seen it signaled here. So that's what you're expecting. You're expecting a reaction, which you've got. What are we seeing? Are we seeing heavy selling here? Not particularly. It's in agreement with the price action, but it's not particularly heavy. It has risen a little bit, but it's not particularly dramatic. We just have to wait for the next move. Maybe a level will build. But the trend monitor is remaining red for the time being. The trend line here, which comes with it, is flatlining, picking up a little bit. And what the trend line does, it just gives you an idea of how far the trend has developed away from this midpoint, this zero, if you will. So that's all on 15-second. Let's go down onto something a little bit less frenetic, maybe. Let's go up onto the 5-minute here. Not a particularly big increase in volume, I have to say, in terms of that one. So let's go back onto it. Let's just see what's going on in terms of cable. More volatility coming in here, so expect the market to reverse again. Just flick this back to cable. Volatility here. We've got volatility all over the place is what we expect. We're not really moving away from this volume point of control for the time being. And it's just a question of waiting and being patient. The trend line is rising. We've got a potential shift in sentiment there. You can see it's gone through into possibly into a darker red. No shift on 10 and no shift on 15. Just going to switch back to Anna for a moment.
Hi everyone, I think you can all see my screen at the moment, and it's just David hasn't turned his thing off, just bear with me a second. There's a lot of feedback. There we are. Anyway, that's sorted. Right, just very, very quickly, I wanted just to finish off with my profile of the of cable, just to show you the setup that I have in terms of a Renko. David has these seconds charts on NinjaTrader. We don't have luxury of seconds charts on MT5. We've got lots of different time frames. So I use a Renko chart, and we've developed this specifically for MT5. I don't think any other software provider has done this. Really, what it does, the Renko, it smooths out all the noise of the price action, but also to give you, to explain to you how as I said, we can see the change in sentiment at the crossover periods. We can see the buying starting to come in. I actually use the Renko for entries, for holding onto positions, and then for actually exiting. I'm just going to have a quick look at what the CSI is telling me. Let's have a look. On the hour, you can see it's still actually showing as a sell, but let's go on to a faster time frame. Let's move that to, let's just undock it. Hold on. There we are. Yeah, let's move that, say, to a 12-minute chart. Let's have a look here. And we can actually see that what we're seeing in on cable is this reversal. We saw it earlier on the faster chart where it had fallen, it tried to rise and then fell again, but actually we are actually seeing some buying coming in to the British pound, both as a function of coming into London, but also as a function of, as I said, that initial reaction to that piece of news. It was on half of the sentence, you know, because the complete statement was as it stands. Now that's kind of, it's not vague, but it could also imply, well, actually, you know, maybe we don't know the extent, you know, what they don't like about it. It could be a very minor thing, so that minor issue could be resolved. So this is what we are also, we have to be aware of when there's a statement released. You know, we only ever focus on, if you like, the headline grabbing a bit of the release, and then underneath it, you know, when you can read it in a little bit more detail, well, maybe, you know, that it's, you know, the deal isn't sort of dead in the water, as it were. And this is how this is reflected on this profile. As we can see here, if we go on to the, let's have a look at the 3 minute. The 3 minute is probably better. This is what we saw. We saw the dramatic fall. Then we've had this period of consolidation going into London, and now we're having a kind of gentle rise. Now, at this point, would you say, well, is this now a good time to perhaps take a reversal? Well, we've got the trend dots, as David said, they always move before the trend monitor. They started to turn blue at this once it came off the support platform at 27.60, and it's sort of gently rising higher. I actually like to wait for the Renko, and this is the Renko. This is the move lower. This is a little bit of consolidation that we've had. We had a little bit of pullback in this as well, but you can see here we have no noise. All the volatility is smoothed out. The red dots keep us in. This is the congestion period prior to that breakaway. So as I said, I would always use this in conjunction with the 3 minute chart. Then the fall, the little pullback. The monitor is consistently red, but we've had this transition, change in transition color. The dots are certainly blue, but this isn't bright blue, and I actually like to wait for a confirmation of the two. And whether you do or you don't then comes down to, well, how aggressive you are as a trader, because part of the reversal trading is at what point in that reversal do you take a position? Do you wait when there is a hint of a reversal? Do you wait for other signals in that reversal? And that comes down to your risk appetite and whether you're prepared to put a little bit more risk on the table, getting in that little bit early. And that is a judgment call, but it's also a function of your personality as a trader. And as I said, these are all topics that we're going to be covering in more detail in upcoming sessions, because as well as that, we then pull together what we're seeing on the charts, what we're seeing in terms of the indicators they're telling us, and as I said, and all against the background of what is happening in the market. And also, as I said, being aware for the pound, we've got this 9:30 release for retail sales. And in fact, this signal, if you like, if you take it as a signal, that's actually come in on the blue. And in fact, if we look over to the time chart here, we can see we've pushed off this support platform here. Now, the next question is, where is that likely to be heading? Well, again, this is where support and resistance comes in. We look at slower time frames. You may use Fibonacci. I've got a Camarilla. And what I also need to see under here is I also need to see some volume coming in supporting this move higher. So really, this profile really exemplifies everything that we have been talking about. Now, talking about signals moving through the time frames, what have we got? Well, on the 10 minutes, of course, you know, we've had, this has still been red. We've had the lift off here. You know, as again, on a reversal, how aggressive are you? Do you want to, do you want to be a little bit short? With reversal trading, you either get in advance or you get in a little bit later, but you always have to give up something in trading. You always have to give back something to the market. And on the hourly chart, as I said, my benchmark chart, in fact, we can see here, as I said, it was a down, then there was buying coming in. We've had a kind of a little doji candle here, and and away we go. So we'll see what happens. But we do have to be aware we've got retail sales, and of course we've got Brexit in the background. That's all I have to say. Thank you so much for coming along today. We don't have a session this afternoon. Something has cropped up and we've had to postpone it, but we are back next Thursday morning. We're actually back at 7:30. We did start a little bit earlier today, again, for reasons beyond our control, but we're back at 7:30 next week. If you only come to this session, I look forward to seeing you then. And I said nothing this afternoon, but we are back to 2 sessions next Thursday. So thanks for coming along. If you have any questions, it's Anna@annacooling.com or David@quantumtrading.com. And have a great trading day. Take care.